Hey everyone, it's Nick with Us versus Herd. Thanks for joining us today. If this is your first time here, please hit that subscribe button. If you're already subscribed, hit that little bell so you get notifications of when we go live. We post a new video every day at 3:30. We'll post a new video or we'll go live like we're doing today. If you're not part of our options trading group, the link is below. We've grown about 100 or 200% in the last month or so. Hit that link. I post all my trades in there throughout the day. Ask questions. It's beginner friendly. There's people that are experienced at trading options, and there's also beginners at trading options. But getting into today, I want to talk about buying and selling premium. A lot of people are buying premium. A lot of people sell premium, and it's like a lot of one-sided strategies. So what I want to, especially for people that are selling premium sellers really like to say, I only sell premium, I never buy premium. You won't catch me buying premium even if it kills me. And for me personally, I like to keep my options open. I like to say, hey, whatever the trade commands, I like to buy premium, and I also like to sell a premium. I don't like to get locked into one mode. If you're like, hey, I only buy stocks and it's a bear market, you're not going to make any money. Or vice versa. If I only short stocks. I mean, yes, it's good to eliminate and know what you're good at, eliminate the options, and really focus on what you're doing. But when you're trading options, it's really good to have a full range of strategies that you use when you're trading options. Because let's say, for instance, Tesla, if you like trading Tesla or Amazon, it's going to go through different market conditions. IV will be high, IV will be low. It'll be at 52-week highs, it'll be at 52-week lows, and all those different market conditions changes what option strategy that you use. So I'm just going to kind of go through that. Today, the market was kind of weird today. We got some tariff news possibly tonight or tomorrow. S&P's closed down, Dow closed up, and Nasdaq was down as well. And tech got crushed, like Facebook and Twitter. If you're watching this right now, feel free to leave a comment. Definitely want to make this a two-sided conversation. So drop those comments anytime. So, Amazon got crushed at one point. It's down at $36 here. At one point, let me actually go into the chart here so you can see it here. Amazon was down 36. At one point, it was down 50 points. Google's just been bleeding over, and then obviously Tesla has been bleeding. So I just want to kind of go over some of my trades today. I bought and sold premium within the last couple days. I'm not locked into one strategy ever. I don't like to personally just buy premium. I don't personally like to sell a premium. I like to do both. And it seems to be working out for me, and I'll kind of go over those trades here. For Tesla, let's go to the... So Tesla, I made some money riding down here. I sold some premium in here, and the reason why I like to sell premium in Tesla, as you can see down below, this is our IV. IV's high, so when IV's high, I like to sell premium, and also the options are super expensive. If you go into the options chain here, for next week, I actually sold some premium in here for next week. And if you're looking at here, they're pricing at a $21 move, or even if you're looking at tomorrow, options expire tomorrow, they're looking at a $7 move, and you're paying close to, if you want to get near the money here, you're paying $290 for these puts, $270 for these calls, right near the money. It's super expensive right now because IV is through the roof on Tesla, and as you can see, it's kind of bottoming out here at 280. I went long today on Tesla, mainly because if you look here at 280 at 1, 2, like 3, 4 times, it tested this area and went back up. I'm not anyway bullish or bearish on Tesla. This is mainly just a chart play. Yes, there's a lot of bad things happening to them, but I guess the SEC wants to settle their investigation and stuff, so they could get a quick bump. And I sold these for next week, so I sold some premium here for next week, mainly because it's really rich premium, and I'm not going to pay $800 or $900 for some puts. I'm not going to buy $800 or $900 from some calls on here if it doesn't move. So if it doesn't move at all, Theta's going to eat at this. Even if it stays like near 280. As you can see, 280 today is worth 270. 280 next week is worth $889 here. So as you can see, even if it stays at 280 for the next week, let's say it consolidated here for the next week, these options are going to come in. Yeah, I'm not going to make max profit. Yeah, I'm not going to make huge returns, but I'll make 30-40%, and that's something that I can live with. So that's why I am shorting premium on Tesla, is just because it's too rich. I'm not going to pay $1,000 for a put or a call on here. It's just way too much capital to risk on something that just might not work out. So when something like this is IV's high, premiums are rich, I lean towards selling premium. And also, people will say, hey, I'm just not going to trade it, but you're going to lose opportunity here. Like if it goes from, I sold that for, let me go into here. I sold that for Tesla today. Yeah, $1.25 credit. It was a 1-for-1. So it's $1.25 max profit, also $1.25 max loss. So my gains will be small, but my risk is small. So I'm instead of risking $800, $900, I'm only risking $125. Yes, my gains are limited, but I'm not going to be battling it out in terms of IV. So if IV, let's say this starts to go up. Also, if this starts to go up to 300, IV down here is going to drop. And also at the same time, while IV is dropping, these options are going to get cheaper. Puts and calls are going to get cheaper when the IV drops. So I don't want to battle the IV drop. I mean, IVs are already at 80, 75 here. It can only go to 100. If this comes back down to 50, down into here, if it makes a monster move, I might not make any money if I buy. Let's say I bought the $300 calls for next week. I'm going to have to fight Theta next week, and I'm going to have to fight IV and all that. So that's why I went into premium selling. Darius, what do you think hedging SH? I'll check out that trade in a little bit here. Now that's selling premium. Going into buying premium. So I've been buying, last couple of weeks, I've been buying strangles on Baba, BABA, Alibaba. And if you look at Alibaba here, you can see that this chart's really broken. They actually hit a new 52-week low today, and it's just going, back and forth. Ever since earnings down here, well, actually before that, basically since this 195 back in July, they've really been struggling, staying afloat here. 195, they've been going down, monster moves pretty frequently, and then recently in the last week, this swings from, it's having $5 to $10 moves almost every day. And you could look here, you could see that the IV is kind of high up here in terms of, what's going on here. The IV is high. I think it's at 70 or 80. But if you look at the options chain, it's having $5, $10 moves a day. If you look for the options for this week over here on the right, it says it's only going to move $3.50. It's only going to move $7.13 next week. So if you go into these, let's go into this week actually, because I actually have a position on. I actually sold this morning, which I put in our options trading group. I had Alibaba 291 credit. So yesterday I put on a position on Alibaba. I bought a strangle, so I bought premium here, $162.50 put, $170 170 strike call. And I put that on yesterday for $1.40, I believe, and I sold it today for $2.91. So I made a little bit more than 100% profit on it. And then I rolled into these 155 puts, and I bought these 165 calls. It was pretty cheap, and that's kind of why I've been buying premium here. Because if you look at these premiums, yes, this is expired tomorrow, but even if you look at next week, these premiums are a lot cheaper than they are, because the expected move is only $7, even though in a day this has been moving $5 to $10 in a day. If I go to the 15-minute chart here, like today, it went from 166 all the way down on 158. We had an $8 move there. Yesterday, it went from 168 down to 162, so a $6 move. The day before that went from 173. It hit a low of 168. So this is every few days it's moving $5, $10 at a time. So the reason why I'm not selling premium here is because the expected move, the moves are greater than the expected move, and when you're buying premium, even though IV is high, when you're buying premium, you're not going to get a good deal. I mean, when you're selling premium, you're not going to get a good deal. But when you're selling premium and it goes beyond the expected move, you're going to get a good deal because it's going to hit options that weren't priced in to get hit. You know, they weren't priced in to actually get in the money. So that's why you'll see like monster moves. Like today wasn't such a big move. I mean, yeah, there was, it was kind of priced in a little bit. Like these puts, they're up 130%, and that, I mean, that's a good return, 200% on these 149s. But you know, it's not like 1,000% or anything. But you know, that's why I chose the strategy of buying premium BABA, and BABA is because it was going beyond the expected move, and then you can pick up some cheap options. And when it goes beyond the expected move, the option buyer is the one making the money. The option seller is going to be losing the money on that. So that's why I actually put a bunch of other trades on too. But those were the main reasons. Today was a good example of buying premium and also shorting premium. I also shorted some premium in Chipotle as well, even though that's not a very liquid stock. With you could play it safer buying selling options in there than you can buying options in there. When there's low liquidity, I like to sell options as well because you command the price, not necessarily the other way around. Hedging SH. All right, Darius wants to know hedging SH. I don't know what SH is here. Let's see here. S&P. What were you looking to hedge is the question. I don't know. We're looking to hedge. From it going up. I mean, looks like it went up today, and going down. Looking to protect the downside or the up moves. I don't really know what your position is. So went bullish on Alex went bullish on CLDR at opening, 208% gain. CLDR. I don't know. Nice. What was that other one supposed to? There was something else. Dollar Tree also had some big moves recently for earnings in here, and as you can see, and this is kind of what I'm looking at. If you're looking at the IV crush here, for those not familiar, when I talk about the IV crush, before earnings on Dollar Tree it was up here. After earnings, it went way down in here. So you're gonna be battling theta, and you're gonna be battling this IV crush when you're take that into account when buying options and selling options. You can use both to your advantage. You just have to know which trade to put on there. There's a short tip. If it goes up, it's by going down, vice versa. Oliver BRZU bull puts. What's BRZU? You guys like to trade these directional ETFs, huh? Jeez. Yeah, I mean, IV's through the roof here on these guys right here. This is Brazil. Yeah. This is went from 65 down to 16. Yeah, I don't know. I don't really stay up to, like, the things that I typically like to trade are things that I'm interested in, and things that I don't really like to trade things that rely on government policy, monetary policy, that kind of thing. I try to stay out of the politics as much as I can when trading, because it's not really reliable. Also, I don't really like trading like pharmaceuticals, therapeutic companies that rely on FDA approvals or that kind of thing, because that's really 50-50, and it takes a long time for that to happen. Yes, things get delayed, or like, let's say the phase 2, someone died in phase 2 and then the stock tanks, or phase 2 happens but it's like 4 years later, and then they get the approval. So typically, personally, I don't like trading things like that. I like to trade more things along the tech stocks, mainly because they're quickly moving companies. I'm interested in their products, and they move fast and they develop fast. I mean, yes, you can't control everything, but I like to, when looking into stocks, I like to trade stocks that I'm interested in versus just trading anything that you can make $1 on, or anything that you didn't make, you don't know. Like things that I'm not very good at trading, like Wynn Resorts. I'm not very good at trading, and you kind of have to understand, like, you got to know your strengths and weaknesses here. This was a great stock. It ran up from 140 to 203. Definitely two-sided markets in here. But I can't stay up on all the gambling news. I couldn't keep up on it. This is not something that I was able to see, and I'm not really good at understanding the business of Wynn Resorts or gambling in general. So that's why I don't really trade certain things. A good put buy on Twitter meets all bearish. So CryptoSlice says a good put buy on Twitter meets all bearish indicators. Actually today I bought Twitter. Let me show you my position here. So today I bought these October. So this is an example of buying premium. So I bought these October calls, $40 calls today. And the reason why I bought them is I'm a shareholder. I am a Twitter believer. I do like the stock. My average cost is $19 a share, and this year, it's one of my best performing stocks for options trading for the whole year. And the reason for that is because I've been writing this up, and when it consolidates for me, I buy and it goes up. Personally, I like Twitter. Yes, it did have. This is looking really, really terrible. So I bought 5 of those calls, $40 calls for I think 15 cents. Let's see here. I'll show you right now. Twitter. Yeah, I bought 5 at 14 cents. So my risk is about $70. So my risk is $70. So worst case scenario, if this doesn't work out, if this doesn't come back to the 35 or 37 up here, so I bought these $40 calls, see if we'll get a little bit of a gap fill here. If I bought these, what was I going to say? It's a low risk trade, so $70 is my risk. So even if it doesn't go, if it goes to zero, $70, I'm not going to cry about that. I made more money than that in the last 2 days, so I'm not really concerned yet. I think that the risk is to the downside right now. So I'm going to lose $70 if this goes against me. If this retracts back down to 22 down here, which could happen, I'm going to lose $22. But if it goes back up to 40 or 37.5, I'm going to be making $300-400. So the risk made sense to me to buy premium in here. Also, IV is not very high, so I bought premium in here as well. IV is in the 40s, so not very high. You got CryptoSlice got October 5th. Let's see here. What would you get? Oh, you got the October 5th. Yeah, so I don't necessarily, let's see, what's liquidity? When I buy far out, especially when buying premium like that, Crypto, what was your, what strike did you get for those puts? When I buy a premium, especially like on Twitter is known to consolidate for like a long time. If you look here from March to 2 months of consolidation in here, and I try to buy something further out, especially when a premium's cheap, because in this time frame, IV could expand, because also this October 19th strike here, or date, this October 19th is 1 week before earnings, so maybe it will run up before earnings. So that's another reason why I picked this this date. Also, I don't like trading further out these options, because as you look here, this is the week of October 26th. This is the week of expiration, I think. I think they're expected to do October 23rd is their earnings. And look at the liquidity on these. Like, the volume was basically no volume on any of these. But if you look at the monthlies, if you go to the monthlies here, 10,000 contracts here, open interest, 5,000 were traded just today. So further out, I like to trade. When you go further out, I like to trade the monthlies instead of the weeklies, because you'll have that liquidity and you'll be able to get in and out of trades versus trading far out weeklies like these October 26th, October 5th. October 5th has some liquidity in here because it's 29 days away, but I try to push it a little bit further. GSK, Glenn, GSK Strangle 39.40. So he bought the GSK Strangle. Let's go. Yeah, premium is low in here. It looks like a very good two-sided market. I would say, let's see here, GSK 1026. Yeah, the only issue I see with this is volume. I mean, these got only one contract was traded on these October 26th, October 26th. One contract on all these strikes were traded today, and there's no open interest. There was 11 over here, but I mean, this not very liquid. I would go more towards like the monthlies. I mean, there's at least some contracts traded here. I'll actually make myself a little bit smaller so you can see. You know, there was some. This had 250. This had 5 contracts, but GSK not very liquid. It does look like there's some opportunity here in terms of the two-sided action, but options chain not very liquid. So anyway, guys, I don't want to make this video too long. We're coming up on 20 minutes of this live stream. Appreciate all those that chipped in. I just wanted to kind of give you guys a heads up on why I choose to buy and sell. I mean, again, this is my own opinion. Trade at your own risk. Always do your own due diligence. But this is why I also buy and sell premium. If you're not a subscriber yet, hit the subscribe button. And if this video was of value to you, please hit that like button. Thanks.